Long time no see. This is my third time trying to record this because my mic keeps messing up. So third time's the charm. Hopefully this one gets out. But yeah, I've been inactive for a couple of months because I wanted to solely focus on my trading and my personal edge, aka refining them. Hence why I've taken such a long break from social media and uploading onto YouTube. But that's been going well, and now I'm back, so expect more frequent videos to occur. In this video, it's going to be a fairly short one. It's just a trade recap on the trade I took this week. It's a really easy and simple technical analysis, and hopefully you guys learn something new from it. Right, now, let's get started. So, on my monthly time frame, what do we have here? It's quite simple, and it's quite obvious that we're in a bullish market. Right, we're printing higher lows, higher highs, higher lows, higher highs, and eventually a higher low and a higher high. That is the idea for Nasdaq. Right, we haven't switched bearish yet on the monthly. Obviously, on the monthly, you don't always have to do monthly all the way down to your 15 minutes, 1 hour, because you're simply trading intraday or day trading. Unless you're swing trading, then you don't really need a monthly time frame. But I like to do it every now and then to get a long-term sentiment on where price is going to head to. Now, one concept I want to touch up on is weak lows, weak highs, strong highs, and strong lows. If you look over here, this is what a strong low is. Here, you have a weak low. Price takes out that weak low, accumulates positions, distributes higher, retraces, and then continues distributing. Essentially, this right here becomes your strong low. You're not anticipating for this strong low to get taken out unless price was to reverse fully. And this is a weak low simply because it hasn't taken out any low previously. Simple as. And then if you invert this, it's the same thing. This is a strong high, weak low, and then continuation lower. Of course, if price was to take out that strong high, then you could anticipate some sort of a bullish reversal, considering that your narrative supports this idea. Pretty simple, right? Now let's invert this again. And then look at the monthly. What do we have here? Swing highs, swing high, swing high. They all get disrespected. Surprise? No, not a surprise. Simply because we are in a bullish narrative. Yeah, swing highs, disrespected. And that all gets disrespected. But focus here on your lows. Look at this low. That also gets disrespected. But look at what you get here. You get a heavy displacement away from it. So now, this weak low gets violated, and this becomes a strong low. You're not anticipating for price to take out this low unless it was to reverse, which is essentially what you got here. Yeah, this is a weak low. Let's check actually. Yeah, that is a weak low on the monthly time frame. Now, obviously, if you go down as a weekly, it can be considered a strong low, simply because here you have an imbalance. Price retraces into it and takes out these relatively equal lows for a sell side. So that becomes your strong low on a weekly, and you can see how it displaces higher. But to avoid confusion, on the monthly, this is just considered a weak low. Weak low, weak low. And yeah, ignoring this price action here right here. Weak low, weak low. And here we are continued to take out these swing highs. The reason why I want you guys to dial on weak lows is because sooner or later, weak lows will get taken out, because underneath weak lows is an abundance of sell-side liquidity. The reason why this is a strong low is because here, before we had this price action, the previous weak low has an abundance of sell-side liquidity. So when price comes out, takes out the sell-side liquidity, what it's essentially doing is accumulating more long positions to distribute price higher, and hence why you don't get an abundance of sell-side liquidity down here compared to these weak lows, because it's already been taken out and accumulated. Simple as. Doesn't get any more difficult. You have these relatively weak lows. And of course, in hindsight, price takes it out. Now, you could argue the reason for price taking these because of the uncertainty from Trump's tariffs, particularly leaning towards a bearish outlook, and hence why we had this retracement. But fundamentals, that is for another video. In this video, we are solely going to be focusing on technical analysis. And you can see here, even though the fundamentals gave you a bearish outlook, technicals still played out. All this simply is a raid on sell-side liquidity, sweep, whatever you want to call it. That is essentially what it done. April took out these lows, accumulated more positions, distributed higher, and had a bullish closure. You can see how significant it was by this long wick left behind. Now, how does that relate to my trade? Simple, because April had this closure, which means May I am going in with a bullish sentiment. This candle is obviously closed now, which meant my bullish sentiment was correct. But here, this would become my next draw liquidity, which is the all-time highs. That is what I'm essentially looking for going into the next couple of months. Whether June gives us a retracement before we continue higher, or it just straight up expands higher. You don't know, and there's no point guessing. That's just going to be part of your anticipation, and that is what to expect. This still remains my draw liquidity. Price will have to show me that it wants to continue expanding to this draw for it to be valid, right? Now, because I had a bullish sentiment going into May, what would I be looking for? Longs, simple as. But now, let's go down onto the weekly. What do we have here on the weekly? Remember, we had this week low on the monthly, takes it out, and this places higher. Refining this is also a week low, and this is also a week low. The key thing with week lows and week highs is you want to see an immediate reaction after it takes it out, which is what we get here. These two bearish candles were the ones that took out this week low on your monthly time frame. So these two bearish candles become a significant player in future price action, aka this just becomes your bullish order block. The reason why I use these two consecutive down candles is because on the higher time frame, this is just one large bullish order block. So when you see two consecutive candles like this, just use two of them, or even three. Like you could use all of these four, assuming this price action didn't happen. And after this, 4 consecutive bearish candles were created, price reversed completely, closed above this high, right? You could use it like that. But here, significant down candles, because that was the one that took out this significant weak low. And then price reverses from there. What happens when price reverses from here? This candle had a full body closure past this open, right? Remember, full body closures past the open is the only way to validate an order block. Before this happened, this isn't even an order block yet. Granted, you could use that singular candle, but like I said, on a higher time frame, this is just one large bullish order block. Hence why this is more higher probability to use 2 consecutive candles rather than just one. So if you play price up, full body closure past that, validate this bullish order block, and then what do you get for the next week? Down candle retraces into this bullish order block. What does this now become? This is now your propulsion block. When a propulsion block gets formed, you ideally want to see price displace heavily away from it. And that is basically what you had here. We had, a gap here, an opening gap there, and then it displaces heavily away from that propulsion block. And this is where the difficulty starts to get higher. The game gets harder because prior to this week, what did we get? We get a down candle. Why did we get a down candle? Because if you look here, what do you see? This is just basically a bullish market maker buy model. We came back into this high time frame PD array, displays heavily away, which makes this just your original consolidation. What happens at the original consolidation is a high volume node. There's a lot of volume happening around this area. So when price comes to this area, don't be surprised if it shows some sort of a resistance. If you want to refine this, 2 up candles, they become your bearish order blocks. The reason why this one's significant is because it took out this high, internal high, before taking out the external low. So these 2 up candles were the reason for price taking out this external low. Furthermore, what does it overlap with? This imbalance which also happens to be the reason behind taking out this external low. So from this level to this level, the one that overlaps with each other is pretty significant. And that is why we had a retracement from that level. But most of you guys on the lower time frame, because for some reason you're so glued to the lower time frames, you would think this would be a reversal and then potentially, I don't know, taking out all of these lows, right? But that's not the way to think, because your higher time frame dictates everything. Your monthly, bullish. Weekly, bullish. So this is literally just a retracement. Remember, price can't just expand all in one go, right? It always has to have some sort of retracement to accumulate more positions before expanding higher. If you go down to the daily, the reason why I said a lot of you guys would think this is a reversal is because look what you have here. You have a key level, right? Key premium level. Price takes out that swing high, which is a weak high. So this becomes a strong high in theory. And then we take out this external range low. So because we took out this external range low, this becomes your market structural break. And that is why a lot of you are messing up. The reason why you're messing up is because you think that we had this, price is going to continue lower. Look at a weekly. Like I said, no signs of a bearish reversal yet. Hence why even though all of this happened, I'm still anticipating higher price action. Because remember, my draw is all the way up here. And on the weekly, the draw going into this week would be your previous week's high. I always use weekly draws. Monthly draws are my overall draw. Weekly draws are next in line until my overall draw gets hit. So going into this week, previous week was my overall draw. And you can see here that we had this imbalance. This imbalance, like I said, also realigns with this old high. This old high is significant. Why is it significant? Respects imbalance, swing high, takes out this low. That's why it's significant. The more confluences that a level has, and the more that a level has done, the higher probability you're going to get a reaction from that level. That's essentially all it is. And that is how you start to build a narrative. So hence why this level was a good level to anticipate some sort of a bounce off. Now, of course, price can go all the way down to this level. I'm not saying it can't, but this level is also high probability. The only way to determine which level is going to get respected is jumping down and then seeing the narrative that forms at each level. And the reason why it could also go this deep is because we took out an external range high. That is another thing that I want to point out. Yeah. This is your internal range low, right? Internal range low. Look what price does every time it takes out an internal range high. Sorry, not internal range low. I mean internal range high. Look what price does every time it takes out an internal range high. It doesn't have a deep retracement. The reason being is because internal range highs, as opposed to external range highs, the difference is the amount of liquidity resting above them. External range highs will always have a more significant abundance of liquidity, whereas internal range highs, there's not so much compared to external range highs, hence why you're not anticipating such a deep retracement. If price takes out an internal range high and has a deep retracement, it's likely, not all the time, but it makes it more likely that price could potentially reverse from there. For example, here, if price takes that up and it retraces all the way down to this low, to this bullish order block, then I would anticipate for this low to go. And depending on how price reacts at this low, then this would be my next draw. If price simply just rates this and then continues higher, displaces higher, then, the long idea is still valid. But full body closure, then this would probably be my next draw. Right? So you're just playing what price shows you. You're not trying to estimate or guess, predict where it's going to go. You're simply just playing what price tells you. And here, price told you it took out an internal range high, so you're not anticipating such a deep retracement. Now, going back to this daily level over here, like I said, no telling which level is going to hold, so we just have to go down onto the lower time frame. If we look at Forex Factory here, this is for this week. Monday was a US bank holiday, so expect consolidation. Tuesday, not much red folder. We didn't have any red folder until the end of the week, which means don't be surprised if you don't get any expansion during the start of the week. Now, that doesn't mean you can't take any good trades at the start of the week. Just don't be surprised if you don't get that expansion. Unless, of course, you're playing very close to a drawn liquidity. Then in that scenario, you could anticipate some sort of an expansion regardless of red folder news, because then that expansion is simply just your manipulation potentially. Going back to TradingView here. This was Friday's closure. Take note, didn't really give us anything. My plan, my edge, is best executed when I have a clear idea of where the next daily is going to expand to. That is essentially my plan. If I can't tell where the next daily is going to expand to, then it becomes low probability for me. But here, if you're solely looking at daily, can't really tell much. You can predict, you can anticipate some sort of reaction here, but this daily candle isn't that great. This is why we jump down. And you can see here how, the 4 hour is still bearish. The narrative is still bearish. We keep playing price out to Tuesday. Remember, Monday was a bank holiday, so we didn't have a daily candle to play off of for Tuesday. So we're just playing off of the Friday daily candle for now. But if you look here, let's remove this for now, because it's pretty confusing. Again, fractal. This is just a market maker buy model, is it not? 4 hour, what did we get here? Same thing we got on a higher time frame. Price comes down into a higher time frame level, takes out these weak lows. Look at all these weak lows. Juicy weak lows. Right, took it out. This down candle was the one that took out these weak lows, and it came into our higher time frame discount level. This means when price has a full body closure past the open of this down candle, that is where you can anticipate for a reversal to go bullish. What else do you have here? Full body closure past the imbalance that caused this low to go, and the mitigation of this higher time frame discount level. And then price displaces heavily away from the open. This is an imbalance. The imbalance that caused price to take out this swing high. And also, the imbalance that closed above this imbalance over here. What else? This one also overlaps with this bullish order block. Essentially, what I'm trying to say is, this level is really significant, and that is why we gain this reaction over here. Price comes down, respects this level, displaces higher, takes out these highs. With that in mind, going into Tuesday, what would I anticipate? Some sort of retracement before higher to take out our previous week's high. Now, obviously, it doesn't have to take it out on Tuesday, but that is my overall idea. Another thing, this retracement into this bullish order block also created this propulsion block. Almost forgot about that, but it's fine. Came down, propulsion block. Like I said, with propulsion blocks, you want to see price displace heavily away from that propulsion block. So this is just another confluence. Go down onto the hourly. Let's focus on the propulsion block for now, because that's your immediate price action. We're done with narrative building on the 4 hour. On the hourly, look what we have here. Same thing. Imbalance. This imbalance also overlapped with the 4 hour imbalance, by the way. But same thing. And you have a weak low. After price takes out that weak low, taps into this higher time frame level, displaces away from it, this validates a strong low. So for my idea, I don't necessarily want to see this strong low get taken out. Otherwise, it pretty much invalidates my long idea for that day. So this is your strong low. You have these lows and this low over here. But focusing on this low, what do you have here? You have a bearish order block. This bearish order block caused this swing low to go. And also this one over here. Hence why it's a pretty significant bearish order block. You could argue, that this is also pretty significant, but this one basically engulfs the previous candle. So I'm just using these two consecutive up candles. If you drag it out, after price disrespects this bearish order block, this level just becomes your breaker block, which, bearing in mind, also overlaps with this 4 hour propulsion block, right? So what would my trade idea be? Retracement lower, continuation higher. Simply because that is what I'm anticipating for the daily expansion to be on Tuesday. Because we have this draw, and everything is aligning bullish. Hourly, bullish. 4 hour, bullish. 12 hour, bullish. Daily, bullish. Everything's bullish. And we have a strong low over here. So this is literally my trade idea. Stop loss below there. Right, so let's keep playing price action out. Now we're entering New York session. This is my execution zone. I entered somewhere over here. Stop loss below there. And then targeted 1.5R. Now, obviously, I could extend my target order over to here, but why didn't I? Because if you go back to Forex Factory, we didn't have any news until Thursday and Friday. So I wasn't anticipating for a complete expansion to the previous week's high. But that doesn't mean it doesn't have to do that. But that was just my idea going into this trade beforehand. So entry there, at this breaker block, stop loss below this strong low, because if price was to take out this strong low, it's likely we're going to continue pretty deep. And from then, I wouldn't necessarily be looking for longs, and I would wait for more candles to print, right? Because remember, you're not trying to predict candles. You're just trading what you see and what the candles give you. With technical analysis, you're just trading historical data. Key levels, you're waiting for a reaction from. Once it gives you that reaction, then you execute. That's the basic of it. So here, I entered around there. You can see it pretty much expanded away from it. The reason being is because we have such a strong confluence here. And also remember, the 4 hour is a propulsion block. Notice how when price retraced into this propulsion block, it expanded heavily away from it. Keep playing price out. It eventually took out that previous week's high. So if you go back to here, you might be wondering what these are. These lines are just my Asia range standard deviations. So essentially what it is the further price goes in terms of standard deviation, the more likely we could anticipate a bounce or a possible retracement. And hence why it was also aligned with my 2 standard deviation, right? Because 4 standard deviation and 3 standard deviation was unlikely, right? So that's another reason why I had 1.5R as my target. That's pretty much it. Of course, some could argue you could go down to the 15-minute, refine, and then enter. I sometimes do that, but most of my trades, because my stop loss is already at a logical level that would invalidate the entire trade idea, I don't necessarily stress about refining because I just want to determine where the daily is going to expand to and then be in the right direction. I'm not really interested in refining my entries if I know my direction is going to be correct. Because for a lot of people, refining your entries on the lower time frame is what messes you up a lot. So stop loss below a strong low. And then if you go out to replay mode, you can see after we took out that previous week's high, price gets pretty messy. It gets pretty low probability. So if you look here, take this out. You see how nice Tuesday's candle was? That is why I entered into a long, because Tuesday was very easy to tell where I was likely going to head towards. We had a clear draw still intact. But now, after we took out this draw, which is your previous week's high, look at what price does. Large upper wick, large bottom wick. A lot of manipulation happening within these ranges. You don't know where price is going to head to next. And that is where you should just sit on your hands because the conditions are low probability. Now, if we look at the weekly, this is how it closed. This is how the monthly closed. Bullish. So going to next month, I would anticipate, of course, some sort of higher price action into this draw, considering how close we are to it. Weekly didn't really have a strong closure. The wick just swept the previous week's wick. But here, we still have higher lows and higher highs. So which is why my bullish idea still holds. And ideally, I want to see price have a full body closure past this imbalance. Once we do, then it's very likely we're going to go to this high. But like I said, no point predicting. We're just going to go into next week and anticipate based on what price gives us. And that pretty much concludes the end of this video. I hope you guys learned something new in this video. And like always, take care.